Hey guys, what's up? I said something a couple days ago about how as we get out of this long bear market and prices have consolidated and started to move up and we're heading into a bull market, that we're going to have to start changing the way we think about a lot of things because fundamentally it is more difficult to invest successfully in a bull market than it is in a bear market. In a bear market, everything is on sale. You can just buy value at discounts. Card stores will underwrite your hobby with their losses, and it's easy. I mean, the choices are not difficult in a bear market. But when you get in a bull market, you have several strategy problems that come into play that are not there on the bear side. And so I wanted to make this video to kind of prime everybody's thoughts about these subjects, get you thinking about them, and I'll definitely be revisiting them in more videos tangentially over the next several months because it's been on my mind a lot, and I just want to kind of get everything out there at a superficial top level right now. So I've made some notes that I'll be referencing. The first fundamental problem you have is that the dumb money comes back into the market looking for free tendies. And what I mean by that is all the fair weather investors, the people who think that they're going to flip products and make a bunch of money real fast, and they come flooding back in with all this money, and it starts driving prices up at an exaggerated rate. And so you end up with another problem, which is momentum trades. And so a momentum trade is where somebody sees that an asset has started going up, and so they say, well, man, it's great. They commit the straight line fallacy. They think it's going to go to the moon, and so they jump in. Well, when they jump in and they start buying up that asset, it makes the price go up more, and then it gets the attention of more people, and they all think it's going to the moon, and they jump in. And so essentially the bandwagon effect and the greed and desire to make money causes people to think that, oh, this is just a perfect investment, and they jump on. Now, there are a small number of people who intentionally try to play momentum trades knowing that they're just momentum trades whose cost benefit analysis is way out of whack. Their price to the fundamental underlying asset is out of whack, and they try to play that. But most people aren't doing that. Most people are jumping on because they see other people do it, and they think, well, other people are making money. Other people already tripled their money on GameStop stock or AMC stock, and so now I can just jump in after it's quadrupled again, and I'll quadruple it. And obviously you can see that doesn't work. Eventually the momentum reverses, the price collapses, and a lot of people lose a lot of money. But that's not really a concern in a bear market, right? Because when you go out in a bear market and the price has gone down and people say, oh, well, that means it's worthless, and they get out, and so the price goes down more, and you have a momentum trade, but it's to the downside because you're in a bear market. Well, you may see this price that's gone way down like this, and you may assess that the value of the product lies here above it. And the vertical distance between there is the discount you're getting from what you assess the value to be against where the market is pricing it today. And that's part of what makes bear markets so fun and easy. You get to buy quality at big discounts. But when you're in a bull market and the momentum is to the upside, but you assess that the fair value or the actual value, your opinion of the value is somewhere around here, the vertical distance, that's a premium you have to pay to what you think the product is really worth long term, and how much you assess the momentum is affecting the price. And so that makes it really difficult because it's not always just momentum. Some products really are worth more money. And it makes it difficult to tease out the difference. And then you have all of these people who have come in who will just throw money at anything thinking that it's going to double or triple or go to the moon or whatever. And so the entire picture of assessing what something is worth becomes much more difficult. And you may be kind of trapped in the price memory of the previous bear market and say, well, I'm used to paying $85 for a draft box. Well, that's going to come to an end. Print runs are getting tightened up a little bit. It looks like distribution is getting tightened up a little bit. Everything's a little more disciplined. More people are coming back into the market competing for the products. And you know what? A year from now, I don't think we're going to have a lot of $85 draft boxes going around. But if you remain trapped in the mindset that draft boxes should cost $85 once we get at least 6 weeks after release, then you're going to miss out a lot. So all these problems kind of coalesce to make it more difficult to figure out where the good values are, what your acceptable prices for something should be. And then you have to get into the mindset that, yeah, sometimes you do have to pay a premium during a bull market over what you think something is worth. And you'll pay that extra money today, and then you'll have to wait sometime in the future for that momentum to kind of crash out or the price to come back to reverting to the mean, and for the real value you think the thing is worth to kind of rise up. And when they intersect, then you're good on a dollar basis, but you've lost that horizontal time on the plot in between those two events, between where you bought and where the thing you feel like is worth what the market is valuing it at that point. And so essentially when you're no longer upside down in the asset according to your opinion. And so you lose that time. And that's something you're just going to have to get used to giving up on occasion during a bull market. So price memory, momentum trades can collapse. Back to buying low price boxes. One of the reasons I made the video a couple weeks ago that I thoroughly love this bear market is we've had a year now of buying boxes below wholesale, of card stores generously losing money to underwrite our investments in these products. Card stores taking the product from distribution and then seeing what market there is, seeing that they have too much of the product on hand, and unloading it just to get capital back, just to keep the lights on. And that's going to come to an end. And you just have to be ready for that. You have to be ready to change your mindset. And eventually we're going to be talking about regularly buying product above wholesale, and that the below wholesale opportunities are going to dry up. But beyond that, we're going to be talking about things like buying above MSRP. When it comes to Pokemon, there may be times, depending on how Pokemon handles their printing and their distribution in the coming year, we may have to buy things above MSRP because the market may be so nutty at some point that we think we will miss out otherwise. And kind of tying into this is, yeah, you may miss out. And I was having a conversation with a patron. He sent me a message the other day, and he's just kind of trying to feel out what my thoughts on Lord of the Rings and Commander Masters were, and pre-order strategy, and how much I was going to buy. And I thought about it a good bit before responding to him. And part of my response was that I thought Commander Masters is going to be crazy. The pre-orders, the release period, maybe the first 2 weeks after release, it's just going to be nuts because it's going to be such a great set. But also it's just going to be so expensive, and emotions will be running high and everything. And I said, I'm not going to pre-order any of it. I'm going to wait for it to die down. And if I miss out, it's okay. And that's one thing you need to always keep in mind, where this world of TCGs and collectibles and things like this, investing in these things, there will always be more opportunity. If you missed the lows of the oil and gas bear market in the mid 2020, then you basically missed out maybe for an entire oil and gas super cycle on buying at those kind of prices. And so essentially it may be another, I don't know, just throw out a number, but 3 or 5 or 7 years or something before we see those kind of prices again, especially compared to valuations and compared to, cash flows and profits and everything else. But with TCGs and collectibles, there's always more expansions. There's always artificial scarcity, which drives asset values up. And so if you miss out on one thing, it's okay. Don't fret about it. I've missed out a couple of times since I started doing this several years back, and it's all right. You may get an opportunity to pick those things up later, maybe during the next bear market, but there will always be more expansions. Flesh and Blood is moving from 3 to 4 a year. Pokemon's at 5 or 6 a year, depending on the year. Magic's at like 28 expansions a year now or something. And so there's always more opportunity for additional product. And so if you miss one because either the price runs away from what you're comfortable with, or you absolutely just screw up and you misjudge the price and the values, and you just sit too long and you miss out, it's all right. Don't worry about it. There's always more opportunity in these markets. So don't worry about those things. One other thing, pre-orders become viable again during bull markets. And during a bear market, there were very, very rare situations where a pre-order was viable. In fact, the last one I really remember, I mean, I've done it occasionally, but only because it coincided with a bonus bucks sale and it was already at just about wholesale prices, and then I got bonus bucks. But going backwards, Double Masters 2022 last summer, if you go back and you watch my videos and Rudy's videos and a bunch of other people's videos at the time, everybody thought Double Masters 2022 collector boxes were going to be short printed. They thought that the supply would be incredibly low, and so everybody ran out and pre-ordered. And so, given what everybody collectively believed at the time, it seemed like a good idea to pre-order. So those are kind of rare situations during a bear market when it makes sense to pre-order. But when you get into a bull market, you're going to have to consider doing it a lot more often. Now, pre-ordering standard products, standard sets are in print anywhere from about 12 to 20 months, depending on where they fall in the rotation life cycle. So you can really think twice about pre-ordering standard products unless it's standard collector boxes. Then you've got to decide, are there chase cards in it? Are there any statements by WotC on the rarity of chase cards from which we might deduce with some certainty the number of boxes produced, and how can we compare that to previous products from which we could deduce the number of boxes produced and how they performed after they were released? So you can kind of do some analysis on the collector boxes of standard sets, but when it comes to draft and set boxes of standard sets, pre-ordering probably out of the question still, even during a bull market. But when it comes to things like straight to modern or commander sets or particularly good commander precons, things like that, you really need to consider pre-ordering because again, the momentum trade, the FOMO, prices can actually rise after a product comes out instead of what we're used to from the last 12 to 15 months of prices almost universally falling after a product comes out. So just keep that in mind. That's another one of these things where you need to be prepared to change the way you think about things because the market is moving. The ways we've been thinking and acting for the last 12, 15, maybe even 18 months, they will gradually stop working to greater and lesser degrees, and you need to be prepared mentally for that and to act differently. And one final thing I'd like to talk about back on the subject of missing out. Sometimes you miss out and then you get an opportunity later. And if something gets away from you, if you misjudge what the value to you of something is and the price runs away during a bull market, you can make up for that later. And specific to me, that happened with Time Spiral Remastered. It came out around March or April of 2021. It was famously short printed. WotC dumped almost the entire allocation to Amazon immediately, gave very little to card stores, really stuck it hard to card stores over that set. A lot of customers got very mad with the card stores because the stores didn't have the product that people wanted, but the stores couldn't get the product from distribution because WotC didn't give it to distribution. They dumped it to Amazon. And so it was a situation where the box prices spiked way up very fast and they stayed elevated for a long time. And it wasn't until the very depths of this bear market in late 2022 and early 23 that I finally saw the prices of Time Spiral Remastered booster boxes come down to a point where I was comfortable buying them. I paid something like $220 each or something like that, which is way down from where they were at their high. So it was a situation where I had to wait almost 2 years. In fact, I had to wait to nearly the bottom of the next bear market to get that product that had gotten away from me previously, but I did eventually get it. So sometimes you will come back, you'll get the win later on when you thought you lost earlier. So just keep that in mind, stay calm, everything's fine. The calm, rational, unemotional investor makes the most money in the long term. And we just need to be ready to change how we think about these things as we move into a bull market. So let me know what you think, guys. I really look forward to it because the one real difference between the bull and bear markets that I love is people's attitudes. And so while it's a lot easier to make money and to make good buying decisions during a bear market, and while your really mature, experienced investors will be along with you having fun during the bear market, most of the community gets just incredibly pessimistic, incredibly down about the future of everything during bear markets. And at least during a bull market, the mania comes back. the good attitudes come back, the excitement comes back, everybody has more fun. And so that's a lot of fun, even if it's more difficult to make money and identify the best value. So leave your comments down below. Let me know what you think. Like, comment, share, and subscribe. Join me on Final Trade. Join the Patreon.